Hi, from Lalu Ahmed. What is the main cause of the decline in oil prices this week? Yes, I'm going to talk about it. We will discuss it later. It's within our agenda. Yep. So stay tuned. Hi, I saw a Korean questions, but too bad I can't read Korean, so perhaps you can type in English. Yeah, thank you. Hey, Naila, you say that you can't hear me. Maybe is my problems or is you didn't turn up your volume? Guys, yeah. Mohammed say he can hear me. Hi, Francis. Hi, are you there in Nigeria? Okay, good, good. Thank you. From Muhammad, will third war affect the trading market? If so, how? If you have been trading for the past 2 to 3 weeks, I think you definitely feel the impact of the war and on those asset prices. It does impact a lot. I hope you did seize the opportunity and make some profit from it. From David, I blew my account. Um, so I try my best to, give you this market insight and hope that it will help you in your future trading. Maybe you can tune your trading size and also have a better risk management in the future trade. And I hope you can grow your capital and make more profits in the future time. Mohammed say I'm still new to trading, but I'm getting yes. I think there's a lot of a new trader, a major with us today. Yep. So let's learn together, grow together. Hello, Fasikul. All right. So without wasting any time, let's begin our today's webinar. Okay. Before we start, allow me to read out the disclaimer. Okay. Today Market Insight webinar is intended for educational and informational purposes only, and participants shall not take it as financial or investment advice, nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Hugh Prime and I hosting the session are not liable for any losses or damages resulting from the use of information presented today. Participants are responsible for independently verifying information and considering their own financial goals and risk tolerance. Okay, this is the disclaimer for today's session. So once again, welcome. Um, so in today's sessions, we're going to cover several things. Okay, this will be the rundown. So mainly we'll talk about the dollar strength, and also I remember Lalu asked about gold price. So we also cover, I mean oil price. So we will cover gold price and oil price together. And I aware that BTC has been a top hit, but there's some movement. Maybe I foresee something's gonna happen, so I will also cover it a little bit. I'm not pro in cryptocurrency, so I don't know which. I'm not sure if anyone with here today are very keen in trading crypto. Maybe we can learn this together. And of course, lastly, I will have note down some of the key economic event or economic data that's coming in later or next week, and which I think will have some impact on the asset prices, on the pairing and etc. Yep. So without further ado, the first thing that we're going to discuss is the federal monetary policy outlook. Why we want to discuss this is we know Federal Reserve, they are the one that's going to manipulate the US interest rate. And we know the interest rate will have a direct impact on the country's currency. So in this case will be the USD. Yep. So we definitely have to involve Federal Reserve. We have to always look closely to the US dollar strength, because I think about 90% of the thing that we trade will involve USD, right? So yep. And just a small recap. If you guys still remember last week, 2nd of November, the Federal Reserve, as what's the market expected, decided to go for a rate pause. So meaning they want to maintain the current interest rate level, which is 5.25% to 5.5%. Okay, nothing changed. And before this, people are very optimistic. They're saying that maybe in December, before the 2023 ends, the Federal Reserve will have another round of rate hike, because remember, the inflation is still high, is yet to reach the 2% targeted rate. So yes, this was the story in the markets. But if you guys been trading, if you guys remember last Friday we had our October US non-farm payroll, and I think you guys have remember it vividly what happened. So after the release of the NFP data, it causes the dollar to plunge a lot, and it dropped below 105 for the DXY, the dollar index. Why? Because they see, if you have been in the market for for the past half year, you can see normally when the NFP came out like higher than expected, but at the same time you can see the unemployment rate is also high. So it always have this mixed result, or vice versa, when you can see the NFP didn't meet the market expectation, but the unemployment rate is still considered quite good. So you always have this mixed result. But what happened last Friday was both of the data showing that the job markets in the US is softening a lot. Okay, it's have like a signs of softening. So when the Federal see this, or when the market see this, they're gonna think that, oh, job market is slowing down, so the consumption in the US might slowing down because we have lesser income. And also before the NFP unveiled, we have the initial jobless claim, the US initial jobless claim. So that data also shows that more people are going for that claims. It means that more people are unemployed, which means that there's no more signs shows that the US job market is like further softening, and people are not going to spend more. So what they think is, yep, this is the script. This is the scenario that the Federal Reserve want to see after there has been aggressively raising the interest rate since last year March, from 0% to up to now 5.25% to 5.5%. So this is what they want to see. And also, at the moment, if you are trading on bond, if you are aware of it, and trade on the bond price, you know that the US Treasury yield has been quite high, above 4.6% since September. And also because they look at this factor, Federal Reserve think that, yep, they are doing job for the Federal Reserve. They are tightening the financial condition in the US. it means that they are discouraging people from spending, from investing. So at the end of the day, they just want to bring the price pressure to go down. So what I try to say here is, after last Friday NFP reading came out, the dollar plunged a lot was because people, they just wipe away the optimism of the final rate hike from the Federal Reserve. That was what happened last Friday. But if you are with the markets since this week, let me go to like a day trade. You can see since Monday, the dollar index rebounded. This is DXY, the dollar index. Yep. Since Monday, dollar rebounded. Why? Because over the weekend and also now, even up until now, several federal officials came out and give comments, and their comments is mixed, and for me it leans towards a more hawkish tone from them. I can read up several comments from different federal officials. So the Chicago Federal president say he's praising that the Federal Reserve is doing a great job so far. So in tame down the inflation in the US. So I think I cannot remember when. I think last year October or November, when the US have peak in the inflation like 9% and beyond, but until now it's just like 3.7%. So it's like 2/3 of the inflation is not being pressed down. So yeah, the Chicago Federal presidents, praising the U.S. Central Bank, say they are doing a great job. But on the other hand, the federal governor, Michelle Bowman, and she's the one that suggests additional rate hike. So market get this signal, say some of the board members, some of the members from the Federal Reserve, they are advocating another rate hike. This is a very hawkish statement from the Federal Reserve. That's why this is like the factor that push the dollar strength higher. And another hawkish statement from the member was from the Minneapolis federal president. So he wants the market say, don't be too happy, don't be over the moon, because the fight against the inflation is not yet done. So what he wants to say is, he hinted the market say, the Federal Reserve is still have their door opens, and they still have chance to add another round of interest rate to the interest rate. Yep. But and then at the same time, the Fed's governor Christopher Waller says that he sees the job market have like calming down. So this is like what I said earlier. So what he say is, yeah, maybe they are satisfied with their job. They say the job market is coming down, maybe gradually with the help of the high US bond yield. They no need to add additional interest rate. But of course, I think in next year, the Federal Reserve might start to consider cutting rates. So maybe this DXY at above 106, we're not going to see this. And then maybe next year, because it's coming down maybe. And also other countries' inflation, like in the Euro, like in the UK, are still relatively higher than the US. I think was like 5% and above. And compared to US is just like 3%, including Australia. Australia is still above 5% as well for the inflation. So there's still chance for the other countries' central bank to raise the interest rate, when also it close down the gap, the interest rate gap between the USA. So maybe next year the dollar index will gradually coming down. But technical wise, why I want to show this chart is because I noticed something. If you guys know about the price pattern, after a big plunge from Friday, this was from Friday, is a very solid bearish candlestick. We have this with what we call three white soldier candlestick pattern. What does this mean? It just gives us a bullish signal, a trend reversal signal. And yep, if you pull, if I use this Fibonacci retracement, I put it down. You can see, yeah, before we start our session, it was still like struggling at this level. Fibonacci 38.2%, which is at 105.3, roughly at this range. But while we talk, it does surpass, it break above. Let's see at the end of the day whether this candlestick will form firmly above this level. If it does, it tells us a very solid bullish signal. To be honest, me myself, I didn't expect the trend reversal to come so early, because this candlestick, this very big bearish candlestick, was very convincing last Friday, and I thought, and also discussed this with my colleague, my friends, and say, yep, the dollar strength might turn around, have a U-turn, might trade lower and lower, because when the NFP was announced, it was like lower than 105. It is like very, very bearish. Yeah, but after this three white soldiers candlestick came out, it does change my mind. I will still continue to observe, and also I just want you guys to know, and also you can observe together. But of course, at the end of the day, you have to make your own decision, your own trading decision, and also you compare the strength of the USD, compare it with other currency like the euro, like the GBP, like JPY. You compare amongst them and see what's going to happen next with all the the price movement. Okay. Let's go back to the chart. So yep, the argument is this. So now the year-on-year CPI for US is still 3.7, and here the Federal Reserve, like long time ago, that has already stated that what the favorable inflations in the US is 2%. So of course, if you compare to the peak time, like 9% of inflation, down to now 3.7, they did a great job, but 3.7 to 2%, there's still road to go. It's still, there's the distance there. And also just a reminder for you guys, let me pull this out. Also a friendly reminder for you guys, Jerome Powell's going to speak on Thursday night. This is GMT +3. So if you guys are using MT4 or MT5 to trade, the time zone there, they also use GMT +3. So this is also GMT +3 time zone at 10 o'clock. Federal Reserve Chairperson Jerome Powell, he is going to speak. And this time is especially important. What he say in his speech does matter a lot with the dollar strength, as well as the other asset price movement. Because now this is like the final final episodes. We need to dig out something from what he say, and we have to gauge from his word to have some clue, to have an insight of the futures Federal Reserve monetary policy. We have to find out some keyword from him, say whether or not he and his team going to raise the interest rate in December, or they are satisfied with the current interest rate level. So yep, again, reminder for you guys, Thursday night, Federal Reserve Chairperson Jerome Powell, he's going to speak at 10 o'clock. And remember, stay tuned if you want to trade on news, because I promise you, it will definitely boost the volatility. It will fluctuate the dollars as well as others pairing a lot. Okay. Moving on is I'm going to talk about gold and oil prices. I guess a lot of you might also be very interested in these two commodities. A lot of people, including me, I trade this a lot. So first, I'll discuss on the gold price first. If you guys pay attention to the news, we know in the midst of October, we unfortunately we have a war outbreak in the Middle East. We have Israel against the Hamas. Yep. Unfortunately, this thing happens. So when there's a war, gold price and oil price tend to rise, tend to go uptrend, because there was a time people are afraid, they are uncertain with they don't know the development, the future developments of the markets. What will they do? They will try to hold safe haven assets. So gold is like traditionally the best safe haven asset. So you can see for gold price, since this is hourly, let me pull back to day. Yeah. This was when they, excuse me, this was when they know the weekend where the war outbreak, and you can see the gold price jump a lot. So what I'm trying to say here is the surge of the gold prices mainly is because of the war, because people are afraid of, they are just being uncertain, and also the risk off sentiments as like, going up. That's why it boosted the gold price to go and then touch 2000. But if you also watch closely with the developments of what happened in the Middle East, I personally I didn't go there. I don't know what's really happened there. A lot of people still claims that, yeah, they're still bombing on. A lot of bombardment, but the media is like try to calm the market down. Okay, so over like at least since last week, the news, the media has been telling them, the market says that there's a lot of containment in the war. The war is seemingly is going to be very optimistic, and also if you follow the market since last week, what happened to the equity market, because equity market is, because we categorize it as a risky asset. So equity market goes up, rebounded strongly. And what happened to the gold prices? What happened to the oil prices? It plunged a lot, especially the oil. Oil definitely plunged a lot, even during the wartime. Okay, and you see that the gold gradually moving down. So but technical wise, now it come to this moment is very undecided. They still very uncertain which way is going to go. So I'm just quickly pull some of the line for you to have clearer view. Okay. So here is definitely a very strong support level for gold. And here it was like a previous support level for gold when it was like still going high and consolidate. And it come to like a junction. So at here, but yeah, of course, if you use this previous level, you still can put a support level here. And also this level will be very crucial for you. If you really want to trade now, I would advise for you to, at least if you want to open a short position, let's say, you can wait until it break beyond this support level, only you start your trade. Or if you want to have, you think that there's still catalyst for the gold prices to go higher, you maybe also can wait until this level and expect to have like a technical rebound from here. And then maybe you want to TP here if you're not greedy. And if you think it's very, very strong, that is for you to decide. You have to make sure that you do your risk management very, very well. And also, if you want to open a short position, here I would say it's definitely a very, very strong support level, because previously it was like suppress the gold price to, from go beyond this. See, and then like double or triple top was formed here. And also it does provide a support level here. So I can almost certain to say here will definitely be a very strong hurdle for the gold price to break if you want to open a short position here. But of course, if that strongly break below, it will show you a very, very solid bearish signal for the gold prices. Okay, but what I want to tell you is people are over with the war story. I mean, the market is going over with the war story. They turn their focus elsewhere. Now they are seeking trading ideas, trading signal from the the chairmans of the central banks speech. because at the same time, Christine Lagarde, ECB's chairperson, she's also going to give a speech on the same time, I think about the same time with Jerome Powell. Yep. So it does also give, have an impact on the euro, right? People have already shifted their focus from out of the war, because now they are more focused on the economic data, focus on the China economic data as well, and then focus on some like key economic performance data like GDP, like retail sales, like PMIs. Okay, this is good. I think just now Lalu asked about oil. Oil, personally, you don't take my words, no word to word. You have to make your own decision. But for me, gold price, oil price, I will have a bias for it. It have a very strong downturn channel, and it does break beyond this channel. It dropped more rapidly than this downtrend channel. Yeah. And it does, this plummet is backed by a lot of fundamental. Okay, first thing is, we know the oil supply is not disrupted when there's a war in the Middle East, because we know the Middle East is the hub for, it's the most important oil supply hub for the rest of the world. And previously, when the gold price traded higher, was when the war was just started, and then people have this worry and things that there will be a war, oil supply disruption, but this didn't happen. And of course, now we know this war involved in several key countries which they rely a lot on oil supply, with the Lebanon, with the Syria, and those countries, they need to sell more oil to fund the war. So yes, they'll definitely sell a lot of oil. This is the key thing. So this is where the oil supply increased. And another thing is on Tuesday. Let me pull back out this economic calendar. On Tuesday, we have this China trade data. And from here, the trade balance, you can see the China trade balance declined drastically, declined significantly from the previous reading of 77 billion, and even came a lot short than the forecasted number, 82 billion, right? And also yesterday, the US weekly crude oil stock have a very surprise increase in the oil stockpile. So previously was just a 1.3 million barrel increment, but last week have nearly 12 million barrel increment. So what it does tell us is the demand for the oil drop a lot. That's why it leads to a plunge. So please also be, pay attention on the China CPI, which is going to unveil tomorrow. Yep. Tomorrow we will have the China economic data. This will also have an impact on the gold prices. Yeah, please stay tuned with it if you are trading on the oil. And moving on, I will talk a little bit about the Bitcoin. So if you're aware with the Bitcoin, I'll just tell you some of the news that I come across. So first one is, according to CoinGlass, also some other website, they see that the BTC open interest has reached the highest level since September. So this was the yesterday number. More than 100,000 of BTC's contract open is worth multi-millions of dollars. And the second factor is the BTC whales. So BTC whales is those addresses that own 1,000 BTC and above, they consider as BTC whale, has been accumulating significant amounts of BTC over the month. Since I think September, October, there has been accumulating when BTC was relatively cheaper than now. And also now they are still this hype is still ongoing in the crypto world. The crypto investor are still waiting for the US SEC to approve on listing the spot BTC ETF. So when this happen, definitely it will boost the value of the BTC, high, a lot higher. But how high? We don't know, because this is like a new thing. This is like a new financial asset, and no one's know how high, how crazy the price can go. Okay. But just looking at the chart, this is the BTC spot. Previously it was just trading quite sideways. It was trading in the range. But what I observed particularly was when especially lately, and when every time it dropped below 35,000, when it dropped below that, it will always push back up. You always want to make sure that BTC prices keep at above 35,000. So this was a previous price range. But if you get this rectangle away, if you want to draw this triangle, this is what I observe. I see that there is like a bullish flag, is forming, where firstly I noticed that the low is getting higher and higher. We have like a higher low. What's higher low? So all this means that it does tell us a bullish signal. It's like sooner or later BTC is going to trade higher from now. Okay, and also I came across this website. So above here is the BTC prices. Ignore this. What I want you to show you is this one. This is the open interest. This is the aggregated open interest. You can see since September, it's like keep climbing up. So now it's touching like nearly 11 billion. Okay. So I just want to share this with you, but of course, at the end of the day, you make your own decision, you make your own analysis. I just want to discuss this with you. People like in the market, they are quite optimistic with the BTC prices. They think that sooner or later BTC prices might go up. But I mean, especially in crypto market, anything can happen. It will, go down drastically, even like cross, go beyond 30K range, 30K mark. It gonna happen. So I'll just share this with you. Okay. This is a little bit sharing for the BTC. So I'll now go for the economic calendar. Cool. So this is up until next week. Several key things gonna happen from tomorrow onwards until next Friday. I filter it up. The first thing that we definitely want to see is the UK GDP. We also know UK also since last year lift their interest rate level a lot higher. Of course, as a result, it will have a negative impact on the country's economy. So they expecting the GDP, the economic growth, start to contract. So that's why they forecasted a negative reading here. So let's see on Friday, see if the UK GDP will surprise us or not. If it came higher than the forecasted reading, or even better than the previous reading, it will definitely bolster the UK, the sterling to trade higher, especially against the weaker currency now. I would say the yen, Japanese yen, definitely is the weakest now. Especially we have a very dovish BOJ meeting minutes. Okay, Japanese yen definitely very, very weak. But of course, we know euro and also sterling is also very weak. Okay, this is, you want to mark it down. And then moving on next week, next Tuesday, we will have the US CPI. This is another key data for us to gauge the federal monetary policy outlook. I think I have a typo here. Yeah, outlook. From here, we see if the CPI is higher or higher than 3.7 or even maintained at 3.7, this shows that the inflation in the US is still sticky. This means that even we have the high US Treasury yield, it does have a little impact on tightening the financial condition in the US. Maybe you will think the Federal Reserve might do something, might again in December will raise the interest rate higher. We have about another 40 days when the Federal Reserve going to announce their next interest rate decision. Okay, so a lot of things going to happen, a lot of changes. So we have to watch out those things day by day, because when those data came out, it will have a direct impact, will have a direct effect on the strength of dollar, as well as will at the same time affect the price movement of others pairing. And thirdly, the US retail sales number. This is also very important, because this is for us to know the condition of the the economic strength. If the retail sales remain good, because retail sales is from the final consumer. If the consumer, they are still spending, it means that they still have income. This will give the price pressure higher, because they are spending, they still use a lot of money despite a high interest rate. Because high interest rate is like encourage people to save up more, to deposit it with the bank. But if they're not doing so, if they continue to spend, if the investment is still ongoing, people still spend a lot, it was eventually resulted a higher inflation. So if the retail sales is high, if the retail sales is growing, it will prompt us to think that the Federal Reserve might going to raise interest rate in December, and will have a positive impact on the dollar. And of course, we have the inverse relationship with other pairing, like the EUR USD pair, like GBP USD pair, like AUD USD pair. Okay, and also I mentioned about the Australian dollar. Australian dollar and New Zealand dollar, they are relatively stronger than the euro and also the pound sterling. So yep, you can make all this comparison with those different currency, and at the end you make your own trading decision. And also at the moment, do your risk management wisely. Okay. So yeah, this come to the end of our sessions today. So I will now open the Q&A sessions. You can type in the Q&A box or the chat. So if I able to answer you, I will. So our first question is from Lalu. USD JPY is going to 151 again. Is this a statement or a or a question? For me, yes, the chance is quite high, because like I mentioned just now, the Japanese yen definitely is very weak. So when you see when the dollar just like rebounds slightly, but you have a bigger effect on the UJ pair. So yeah, 151 definitely there's a chance. But if you are just about to open a trade, open up your position here, I don't think this is a wise move. Yeah. From Ahmad Kabas, it's better to do analysis or fundamental one in this time. Of course, I would say like this: the fundamental will definitely stronger than the analytic, or we call it technical analysis, because like what happened in the war, like previously, before the war happened. Sorry. Before the war happened, we have this very strong bearish trend for the gold, and then people going to yes, we just keep open a short position for gold. But when the fundamental things happen, when the war outbreak, we can't argue with the market. The gold price just definitely going to surge higher. So yeah, I would say focus more on fundamental. If the market is relatively quiet, if the market is really relatively stable, this is where the technical analysis come in. But of course, you have to do your risk management. You have to do your TP point, take profit point, and also the stop loss point. This is where the technical analysis come in. I would say both are equally important. Yeah. From Mohammed, what should we rely on this week? Fundamental or technical analysis? So this week, like I say, like I've been like remind you guys is Jerome Powell. Jerome Powell's speech is very important, which is the fundamental. What he say is really matters a lot with the market. So if you think that you do a lot of thorough technical analysis, you think that the dollar is going to be strong, for example. But when Jerome Powell come and say, yes, we are done, we are almost done tightening the market condition, just let it be. I'm sure that the dollar will plunge at the moment he says this. So no matter what technical analysis that you apply, it doesn't matter anymore. But of course, when there's nothing happen, that is where we rely on the technical analysis. Okay. Kenny, thank you too. Thanks for supporting us. David in Danny, do you think the NFP was manipulated? I cannot say so. Because like no one know. I'm not sure. I don't have insider news. I don't know people from the US, and personally, I don't always trade on news. I think the risk is very high. I know if we trade the correct direction, we will have a very lucrative profit. But I want to protect my capital. I want to protect my fund. So most of the time, especially NFP, I don't trade. Mostly I will just trade 1 hour or 2 hours after the NFP was announced. Yeah. From Mustafa, what do your insights on ETH, USD, and SOL? I know SOL increased sharply, but I'm not a crypto person. I'm not really into crypto, but I just came across with the news. I know now the Solana has like surged sharply, but I don't know the relationship with any, is there any like fundamental news to support it, the surge? I bet it does. And ETH, I think ETH at the moment will trade. If you compare to the BTC, I think the movement for BTC will be higher if you compare to ETH. But of course, I know I come across I think the ARK investment they have the plan, and also maybe BlackRock they have the plan to launch the ETH ETF as well. So if this news came out, and also if finally get approval from the US SEC, I'm sure that the ETC will also move a lot. But I'm sorry, I'm not really into crypto. I cannot give you more insight on this. From Fabio, do you think next week high impact USD news is going to build the foundation for movement for coming weeks in the US pair? Yes, you especially CPI. CPI is like the 3-star, like very important news. So if the CPI came much lower, it will definitely pressure the dollar from going any higher. But if the CPI is high, and I bet that it might happen, because when I look at the previous US economic data, I see the US economic is relatively healthy. So yes, maybe this rebound will be strong, especially after this. I observe this 3 white soldier. Yeah. Maybe we'll have a strong resistance level at 61.8, which is at 105.69 or 105.7 at this range. Let's see if the dollar can break beyond this level or not. From Joel, so for the moment now at this time, it is now better to rely on trading with the Australian and New Zealand dollar since they are relatively stronger. And of course, one thing I want to add is Australian dollar and New Zealand dollar, it always have impacted by China economic data. So like I say, Thursday we'll also have crucial China economic data, and also next week the president of China, he is going to visit to US. We will talk with Biden. This is also good news. If all this add up, good news for the China, it will, I think, will have some spillover effect on the Aussie dollar as well as the Kiwi. Both of them will have will impact by the China economic data. Yeah, you can stay focused on it more. Yeah, for the Australian dollar and New Zealand dollar. From Gabriel, if you are not a fundamental trader, do you think it is better to keep away trading during market conditions that are too volatile, especially when there's a big news? Of course. To be honest, I also encourage you to do so until you are very familiar with the market, until you have a lot of experience with the market. You come across a lot of things happen, like wartime, like the OPEC cuts oil supply, like Federal Reserve raising interest rate, all these things happen, and then you have been through all this. Yes, of course, I would say when the market is relatively quiet, especially now when November and December, excuse me, when less participants in the markets, this is where you can apply more, I would say, more acute technical analysis, and I think you can make more profits during that time. Muhammad Larib, what is your analysis about USD? Let's have a look. Yep, it's going to reach another top. So, we have, if you go beyond this level is very, very strong. It does have like a triple top. Okay, so firstly, you can notice that this resistance level going to be very, very strong. So what I want to say, if now this pair go beyond this level, it might shows that the Canadian dollar is going to be weak, US dollar is going to be strong, and yeah, you have a chance to go higher. And especially, we also know that the Canadian dollar is always related to the oil price. When we see oil price plunge, because we know Canada export a lot of oil as well. That's why Canadian dollar categorized as a commodity currency. Okay, when we see the oil price plunge dropping, at the same time we can see the Canadian dollar strength also dropping. So in this case, for the UC pair, my view is it might continue for this uptrend, but we have to be extra careful at this level. See, it will be not kept below this range or not. Okay, I think we are about time to end this sessions. So once again, thank you guys for coming. If I didn't, answer your question, I hope you come again next Wednesday. We learn together, we study together, and then thanks again for supporting us. We'll see you guys again next week, and maybe you can share with me your trading result from this week onward. See what's happened to your profit and loss. Okay. And also at the same time, if you have any interested topic that you want us to discuss with you, you just tell your account manager, and then we will get the feedback from them, and we'll try our best to prepare for you guys. So once again, thanks you guys for coming, and see you guys